Hi, this is Robert Clickybeard with the Commercial Landscaper Podcast. I'm going to take about 30 minutes of your life to deliver some amazing content from accomplished leaders, business owners, to provide you some great Ironman mindsets to help you scale your business, to become a better leader and push yourself out of a comfort zone into something that's going to stretch you. We hope you really enjoy these shows and encourage you to like and share with your friends, your network, family members. Try and get a wider audience and improve our industry. On each show, I'm going to try and pull out one type of Ironman mindset, insight that you could take back to your business. And if you're implementing one insight every single week or all the shows, then it's going to make a dramatic improvement to your business. Super excited as well to share that we're partnering up with Boss Business Management Software, which is the ultimate cloud-based solution providing comprehensive insights and tools to optimize performance. Join the Boss community today and transform your business so you too can say, my boss is working for me. Cheers, everyone. Hi, this is Robert Clickybeard with the Commercial Landscaper Podcast. Really excited today to be joined by Matt Bradbury. Good to see you again.
Good to see you too, Robert. How are you?
I'm good. Sorry we didn't connect at Elevate in Charlotte, but we do need to get together. I think we live relatively close by, so we need to go and hit some balls or play in the lake or something.
That'll be fun. Love to play golf and play in the lake.
Yeah, absolutely. So, Matt, for our audience, love to just for them to hear a little bit more about your background, if you don't mind.
I founded a company, Business Acquisition and Merger Associates, literally 20 years ago. We're celebrating our 20th anniversary. I started out as a Main Street business broker for the first 3 years and then moved up into lower middle market transactions. Along the way, I could say we've now closed about $1.8 billion of transactions over 215 or so companies. A lot of those companies are in the services space. So it could be landscape services, facility services, HVAC. For you, I think the part that is most interesting is on the landscape services side. And we've done application companies for chemical application to install businesses, tree services. We've sold to big public companies. We've sold to private equity, to family offices, a lot of different types of buyers. I had the benefit of investing in one such buy and build with a family office not that long ago. We've made 4 acquisitions now. Understand the landscape businesses as representing sellers, representing buyers, and then being a shareholder in the landscape industry myself.
I hear more and more people talking about buying boring or dirty businesses, and that service company fits right into that model. People still need, whether it be landscaping, HVAC, plumbing, electrical. All those are going to be, I suppose, only slightly disrupted by innovation or technology, but there's a lack of qualified tradespeople out there. Yeah.
If your HVAC breaks, you want it fixed. If your grass grows, you want it cut. If the tree falls over, someone needs to come and take care of it and get rid of the stump. So it really is recession proof. None of those things have anything to do with where the economy is. You just need to get those services done. So that's why they're so attractive.
And that's mainly why you went into that sector?
We look at where we could add value. And it's, I'm sure a lot of your watchers would remember back 10 years ago where there was no private equity activity in the landscape space, and they sold for 4 to 5 times EBITDA or 3 to 5 times EBITDA. And so you had to own them for almost ever in order to make any real tangible value. And then private equity started to do buy and build in the space, and it really has created an opportunity for long-term folks in this business to get really good transaction outcomes for their companies in the landscape services or any services. It could be roofing. Go figure that roofing is another one that they're doing buy and build. HVAC is hot, plumbing is hot, residential electric services, commercial electrical services. And again, some of the same dynamics that you see in landscaping where the big money is looking for services versus install. It's the same thing on other services. So they're not looking at guys that are putting HVAC into new homes. They're looking for the guys that only repair and replace an existing HVAC system.
I think one of the things that you mentioned, and I don't think many sellers are aware of this, is just the different types of private equity groups out there. I mean, they hear private equity and then they tend to just switch off after that. But you were sharing with me that just there's so many different elements of that. And I'd love for you just maybe to talk about maybe each one of those and just, high level, some of the pros and cons with each individual group, if there is any.
Throwing under the bus most of the private equity industry, as you'll recall, we've sold 215 companies. And I would say we get about 100 NDAs on every single sell side client. So think about that for a minute. That's 100 prospective buyers of all shape and form that are coming in to look at our client. And I have family offices. I'm going to talk about these during the course of this thing. I have private equity groups that are looking to buy my client as a platform. I have private equity groups that already own a landscaping business and they want to look at my client as an add-on. I have independent sponsors. I have fundless sponsors. I have search funds. But with regards to private equity, I will throw them under the bus in this regard. 15 to 20% of private equity groups are phenomenal. They're phenomenal. They're excellent. Another 15 to 20% are okay/good. You won't get hurt. And that leaves 60 to 70% that I say you hope they're not your partner. Okay?
That's a big number.
So definitely, if you're just because it's private equity, it's not nirvana. There's good private equity. The 80-20 rule still comes in. 20% really are phenomenal. You want to make sure you latch onto one of those. And they could be approaching you where you're a platform, or they're approaching you and you're going to be an add-on to their business. A lot of this comes back to what are the goals and objectives of the owner of this landscape business that's for sale to really understand what is the right buyer for them. Let me start with the ones that are providing the most calls and filling up your inbox with emails. And those are going to be search funds. And what a search fund is, it's typically, I'm going to say freshly minted, relatively young MBA who through their MBA program, you see them at Wharton, you see them at Stanford, Harvard Business School, Booth School of Business. They all have this entrepreneurship program through acquisition, and they pass the hat. They'll raise $300,000 to $500,000 from a bunch of professors and friends. And then they start a search to buy a company, put a thesis together, and they say, I want to go buy a landscape business. And then I want to professionalize it and I want to grow it through acquisition. And my point is, there are a handful, it's the same thing. There's a handful of searchers that are really, really good. But I would characterize them, they really are search funds versus buy funds. There's a lot of guys that their 2 years of searching go and they don't buy anything. They're looking for the perfect business.
Right.
Okay. And that's what you got to be careful of. If I'm talking to a search fund, I want to know that their investor group, here's what would make a search fund a good one. Someone in their investor group has experience in landscape services or facility services or something that's going to be a really good mentor to that searcher. Okay, let's figure that out. Or perhaps that searcher, I've seen this, they grew up in a family business. I love searchers that were kids of entrepreneurs. And maybe it wasn't a landscape business, but when they sat around the dinner table, they did talk about payroll or trying to hire somebody or some of the HR stuff that happens at work. That's what would make a better searcher. They're really good if the owner of this landscape business is 65 to 75 or 80 years old, and he doesn't have marquee key management. The business is really dependent on him. These guys are going to roll up their sleeves. They're going to come in and take that owner's seat and really run and operate the business. So if your business is one that you don't have a great team underneath you, it really is dependent on you. It's you and some crew chiefs and then field techs and labor out there. A search fund might be the best bet for you. Okay. There's something called an independent sponsor or a fundless sponsor. And these guys are typically 30 to 40 years old, 25 to 40 years old. They used to work in private equity. Okay. And then for one reason or another, they found that they weren't moving up in the chain as much in the private equity ecosystem, and maybe they've got good skill at business development, and they want to put their really good business development skill together to find a good business, and then from the relationships in private equity, they will go knock on the doors of private equity groups to back them to invest in your business. Rarely are they going to come in and be the CEO and run it. They still are going to be their pitch to their private equity partners. Hey, I've done some of the research on this business. I'm going to help drive acquisitions. That's part of their skill that they have in corporate development. And I want you, Mr. Private Equity Group, to put up the lion's share of the capital. They might write a check, $500,000, $1 million, something like that. But the private equity group is going to write the balance of the check for that. They're going to be your majority partner. You still need to check the boxes of a traditional private equity group, meaning you don't have customer concentration. You've got the right mix of services from maintenance to install to other things. You have a really good management team in place. They're going to be relying on that in order to make the acquisition. They're going to be backing that team. The downside on an independent sponsor, fundless sponsor, is they get a piece of equity for funding the deal. Could be 15 to 30% of the equity for finding it. And so they're not going to be the guys that pay the top dollar for your business. You may really like them, but just know they're cutting into the economics. And where do they make that work? They take it from you. They buy it for a little bit less than where the market is. And they go to the private equity group and says, look, I can buy it for $10 million versus $15 million. Cut me in. I'm going to keep 20% of the equity for finding it now. And then you guys come in and make the deals. You have a private equity platform, and the private equity group that is looking at you as a platform. Let's do this one next. You need to have most of the key management positions in your business filled. They really want to see that you've done that. They really want to see that you're growing at 5 or 10% organically normally. Your retention is really high in the 90+%. As to what do they pay for your business? Are they paying 8 times, 10 times, or 12 times? It's going to be on size. Private equity looking at like real legitimate private equity looking at you as a platform, you need to be at least $5 million of EBITDA. Okay. Or above. So if you're 2 to 5, it's going to be one of these other groups that's probably you're going to get a lot of activity on. But to be a platform, you need to have a certain amount of scale. They're going to be paying, like I say, an 8 to 10 to 12 multiple on your business based on customer concentration, key man risk, the mix between maintenance and install, and then how strong your people are. If you are at the size right now, you're 5 million of EBITDA and above, if you want to get more value for your business, identify 2 or 3 of your friends in the landscape business that have maintenance as the core of their business and have a conversation with them just to say, hey, I'm looking to grow don't say you're talking to a private equity group yet. Just say, I'm looking to grow my business inorganically. We've been doing great, 5-10% a year organic growth, but I think you would and your team would be a great addition to my business. Set up a couple of those conversations and have them, because when you do talk to a private equity group, they're going to ask, they're going to say, hey, yeah, we can grow organically and through acquisition. They will ask, have you talked to anybody? You legitimately want to say, yes, I've talked to 2 or 3 of my friends. They like what I'm doing. They'd love to be part of what we're doing here. Okay.
Yeah, so instead of one company coming to the table, now you might have 3 or 4 companies coming to the table, and all
that's right.
3 or 4 times the revenue, could be different parts of the country. Yeah.
It makes your business, well, I don't know if it's going to be all different parts of the country, most of the time, if you're going to be a platform, they're going to focus first, I think, on really owning a region or building some scale where you are. Loosely, the Southeast, the Southwest, just own a big swath. That might be 4 or 5 states.
Yeah, makes sense.
That's if it's a platform. And my feedback to your listener, it may sound counterintuitive, but here's how it works. If you're the platform, recognize that you built the culture. And I'm going to tell you, it's the most important part of your business. The culture that you built is the most important part of your business as far as keeping your key people. If you've gotten up to 5 million of EBITDA or 10 million of EBITDA, it didn't happen in a vacuum. It shows you've added a lot of good professional management practices. You have your summer barbecues, you have your company recognition parties, your Christmas parties. You treat your guys well on Fridays, with a barbecue or something. All that stuff is part of the culture that really help you retain good talent. You don't want to lose that. And so we try to match the money culture. Which of these investors really understand and value culture according to what you've built? And we try to match it. And what happens when you have a private equity group that really aligns on culture with you? They like you more. They'll pay you more for your business. Guys that only look at your numbers, they may pay you a lot for your business, but I think you take on more risk post-closing in the legal documents that you're going to sign if you lose some of your key people and you don't hit the numbers that everybody thought you were going to hit. So this is 20 years of experience that I just said in 30 seconds. Really focus on your culture. That is important in your transaction, whether you're going to be a platform. And I would say if you can be a platform, you're probably better off to be a platform, because then you're going to grow your culture. It's your culture that is the legacy culture that moves on. If you're being bought by a private equity group that already owns a platform, double down on making sure the culture is the fit, because your culture is not the one that's going to last. Whatever the culture of that buyer is, their culture is the one that's going to be the one that lasts. And I don't have to tell you names. Everybody knows in this industry when that happened and the big ship, they came in, their culture just squashed what they bought. They messed it up. They got rid of it. The people left, the customers left, and then you don't want that. Then you've got to look at your legal documents and see what you committed to.
Yeah. You don't have to remind me of that. Quick question, Matt. You made such an important point there where, I think of the book Build to Sell. What does it look like in 1, 3, 5 years plus? And the culture comes into it. Am I a platform company? Who's my potential buyer? And there's a lot of things that people can do to help work towards that, but they never do. And is it just because they're not around the right people? They just don't like thinking about it? What's that sticking point?
I do think it starts from a foundational leader that recognizes the value of their people, and to retain people, they need to build culture. And it happens. A culture is building one way or the other, a great culture or a lousy culture. Do you know that?
Right.
Like you can see turnarounds. They've got a culture. They've got all kinds of funkiness in those businesses. But really strong leaders, it comes down from building a culture that says, I really like my employees and I really value my employees, and I want my employee company relationship to be more than just an employer-employee. I want to be part of their family. I want to recognize when their wife has a kid. Like we've seen some phenomenal, really high culture companies. And when you see it, you have to make sure it doesn't get blown up. It's really, really, really valuable.
And I think you made, again, good point that in building the culture, being part of the community, it's so important to those owners, the sellers, to find a good match for them to sell the company to, so that continues. But that can't just happen overnight. That's something that needs to be thought about, planned, almost like the dating game where they're talking to potentially multiple different people to find that match. Is that fair?
Robert, you're absolutely right. I know we only have a couple minutes left here. I do want to hit on a couple other iterations of this. So funded private equity, these guys raised a committed fund, could be 200, 400 million, $1 billion. They have to put that money to work. They're really motivated buyers. They will pay a great price. Within that category, there are guys that are completely hands off. They buy a majority stake of the company and then they sit back and go to quarterly board meetings. There's guys that have a weekly call, and then there's guys that have an operating team and operating partners that are part of the private equity group that really help out. It could be on HR and hiring. It could be on marketing and business development and sales. It could be on executive leadership development, helping to grow the capacity of the people that you have. I want to bring it up just so you know, there's all different flavors of private equity. I do think the best ones are more active than less active, and they bring tangible tools and they have experience in your space. So be looking for that. I mentioned family office. I'm going to close on that because when we partnered with a company, we partnered with a family office. Family office is a wealth, exactly what it says. It's either a single wealthy family or a group of wealthy families that made a ton of money, oftentimes owning companies and selling it. You know, like the Marriott family, the Marriott Hotel, they have a family office that they sold part of Marriott, and that family office goes out and invests in other private companies. Well, there's all kinds of family offices out there, and they bring a longer term perspective. They're not looking at every quarter as tightly as, say, a traditional private equity group, which is going to have a lot more finance guys in it. A family office is going to be more operational, more culturally aligned, because that's how they made their money, is growing and investing in a family business. So they're a little different. They typically don't pay at the highest end. I want you to know that. They're more in tune with just having a really smooth operation. They're not trying to do the buy and builds like there's private equity groups, and they can do 6, 10 acquisitions in a year and just punch them out. A family office may buy 1 or 2 a year. It's a different experience, probably a more collegial experience. And there's really good private equity groups that have a great collegial experience too. So I just want to tell you, they're a little bit different. Family office is a little different than pure private equity.
To try and wrap things up here, and we could go on for hours just talking about this, but there's a seller out there or somebody who's thinking about selling, is getting calls every day from different people trying to get them to sell a business. What would be the best way for them to say, I was listening to Matt, this is the type of group I want to sell to? How do they try? And are they coming through someone like you as a broker, or what's the best way for them to sort of navigate that matching process?
Yeah, no, we're an investment banker, and I would say that recognize these buyers are all professional buyers. This is what they do each day, every day. You're a professional landscape owner, and you are going to sell your business probably once. This is your once in a lifetime shot. So it's good to have somebody who, this is what they do, representing sellers 100% of the time. I think I shared this on a call. There's 100 ways that any buyer, private equity buyer, can take advantage of a seller. Do you know that? There's 100 ways that they can do it.
It doesn't surprise me.
No, and they know it. And you want to make sure that you have someone on your team when they see an LOI come over a certain way or an indication of interest to say, hey, what does this mean? Is this good? Is this bad? I'm real binary. Yes, no, it's good. It's not good. Let's make it good. I also speak in terms of poker that people give you tells all the time. That buyer's throwing out a tell. Are they a high integrity buyer, or are they trying to take advantage of you? And I can look at an indication of interest and say, okay, no, these guys are really trying to take advantage of you, the way they have it structured and the things that they have said there. So I would say it doesn't have to be us, but we love to focus on culture first, represent our client to make sure that they're finding the right home. Is this buyer the right home? If it isn't, let us find the buyer that will be the right home for their business.
How do people get in touch with you to find out a little bit more about your company? What's the best way for them to do
you can go to our website, buysellyourbusiness.com. You can email me, matt@buysellyourbusiness.com. Or I can give you my number, 704-905-0565. That'll come right to me. 704-905-0565. Would love to see if we can help.
Awesome. Matt, thanks for educating the audience just about the different types of buyers out there. That's been super, super helpful, and some of the pros and cons there. So really appreciate your time. I know you're a busy guy, and we'll definitely keep in touch and try and get out there on the golf course soon.
I look forward to it, Robert. Thank you.
Okay, take care. Cheers.
Yep.
Bye-bye.
Bye-bye.
Hopefully that was pure dead brilliant for you today, and you got some great Ironman mindset takeaways for your business or your leadership role. This is Robert Clickybeard. Love to get you, your friends, your employees to join us in our future journey. So please subscribe to your various podcast channels. Visit our website, commerciallandscaper.com or wilson-360.com. You could check out our digital courses. You could check out peer groups, coaching, my book, Ironman Mindset for Entrepreneurs. And we just want you to have a pure, dead, brilliant day. And finally, thanks again to Boss Business Management Software, which is the ultimate cloud-based solution providing comprehensive insights and tools to optimize performance. Join the Boss community today and transform your business so you too can say, my boss is working for me. Cheers, everyone.